Hello, it's Brad, Laurie, or Blockchain Brad, and today something very different. Today we're going to be talking about what it's like to be in the eye of a VC, what it's like to really have these key insights as gentlemen start to explore from the top echelons of the blockchain domain, how to isolate, identify quality investments for the long term. And we are speaking with KR1, which is a very respected investment capital firm or VC in the space. And more specifically, we have two members of that team. We have Keld van Schraven, and we also have George McDonough. Gentlemen, thank you very much for being here. I really appreciate your time, and I'm really excited to learn more about what it's like to be a VC and the processes involved.
Thanks for having us.
No worries. Now, Keld, you I've known for quite some time. Specifically, we've texted for some years now, and I've always maintained that you're one of those VCs I respect. But we're going to explore why, and we're going to learn a lot more about this in this context. But mate, do you want to just give us a bit of information about you, your context, what brought you to this, complex world of crypto and blockchain, so we can get an idea of where you sit in that long to short term agenda, and really, what excites you with the blockchain?
Yeah, I'm quite unusual because I come from the sort of the first web. So I've done Web 1, Web 2, and now Web 3. So that's kind of the sort of unusual aspects about me. And I've basically been doing startups since 1994. So I'm a bit older. So I basically started and sold one of the first web development agencies in 2000, and then had a social media startup, diary.com, in 2007, which didn't go so well, but we scaled to millions of users, and then started a mobile payment company around 2012, and that's still going. That's 100, taken more than 20-30 million in transactions from SMEs. And around 2013, I discovered Bitcoin, and the kind of the mobile payment issues we were having with merchants and Bitcoin, that just kind of made sense to me. And it being a sort of understanding the history of what happened with the browser and the missing tile for the e-money with Mark Anderson's first web browser, Mosaic. Mm-hmm. And the fact we are now living in a digital online society, and there was no real currency or payment mechanism around that kind of just, for me, that was just, I was in the front line of mobile payments, and that was my unique insight. And then, so I just got into crypto and went a bit crypto crazy, and then met George around 2016. And then, we just set up KR1, and it's been a kind of wild ride since then, really.
Well, mate, I've been following you for a few years now, you know that. And one of the things I've always noticed, well, I've always assumed, I have to say, and that's why I love this convo that we're having today, because it is relatively informal for us all to learn more about this world of the VC, is that from my own experience as a researcher, you were very much long-term in the way that you would approach these investments. And what you're saying now resonates with that, because you didn't come in with the agenda to make that fast buck. And we know people did, and I'm not going to judge them for it, but clearly that's the response. And I want to dig deep into that today. So what about you, George? I mean, obviously, money matters, and capital matters as well. But what about your position? Did you come in for the long term as well?
Yeah, I discovered Bitcoin in late 2011. I was working as a copywriter, so I was making adverts, and we had a client who was releasing a mobile phone that had a payment button on it. In those days, there were still phones with buttons. And so I did a research paper for them on online payments and found Bitcoin through that. And I don't know why, I think maybe I was going through a libertarian phase at the time. It just struck me as the most amazing thing I'd ever seen. And not being a technologist at the time, I didn't understand how technology evolves through time and gradually the process of adoption and cycles. I thought I'd completely missed the boat. And me and Mt. Gox a bit later, and suddenly I'd managed to get hold of one, and it was from there I completely fell down the rabbit hole. I quit my job within 3 months, I think, and just to go and brand Bitcoin companies, of which it turns out there weren't a lot in 2011. Well, by this time 2012, and so I just dived into the kind of early Bitcoin social scene in London. Mm-hmm. And I started going to all the meetups, and for me, it was very much, I found myself hanging out with the cleverest people I'd ever met. People who had opinions about money and opinions about state and opinions about computer science. And I completely sort of fell into this fairly sort of anarchic feeling group, and I really bought into all of that. And so I was just in the space for a long time. Started running meetups, and sort of KR1 and my co-founding of that with Keld sort of grew out of just being in the ecosystem for by that time 5 or 6 years I'd already been involved. So that's how I got in.
Wow.
Completely fell in love with the technology and never looked back.
And I can really relate to that personally. I won't go into my own experience, but certainly the agenda was similar in that it was the love affair with the blockchain primarily, that what it could do technologically, what it could do potentially, and how it could revolutionize finance. And even not even then at the time, it was really just looking at what different things it could do that we just didn't even know. And like you said, some brilliant minds have been on at the forefront of that since the beginning. And we now know that the complexities of crypto have come to the fore in 2021. So gentlemen, I really wanted to talk to you about those waves of change as well, because we've all been around in that first wave. When we saw the ICO boom, we saw, that Ethereum mad rush with the smart contracts that really excited sort of the investor world, post Bitcoin. And now we see a very different scenario where we see a lot of competition between VCs of old, almost like legacy models and systems, but that's how fast moving it is with these new transitions, these new up and coming grassroots initiatives, where there's everything from syndicate to, new formed VCs, I don't know what to call them, to new capitals that are just labels, to real capitals. It's really dynamic right now, and there's a lot of competition just to even get in for some of the VCs, ironically, because once again, the power it seems to be shifting. So what are your thoughts on how things have changed in all your experience since, it was relatively easy to get in 2017 if you had a credible brand and you were really serious at the long term, to now? Is it true that there's something shifting here?
I think George and I would have the same view on this, is that we actually prefer the old send some crypto to an address and it's very fair and equal, the old ICO model. I think in our hearts we're still there. We don't actually like the consolidation of VCs around investment. It's kind of, it goes against the ethics of the crowd sale in a way. So we're not actually fans of it at all, which is ironic because we're one of them. But we like to see a lot of participants in a network. Otherwise, the networks, there's a consolidation of power that goes against the whole point of it. But what we know is that a lot of the original VCs were pretty pissed off that they missed out on the whole first wave. Yes. And were sort of starting to knock it because they didn't get into it. And we've seen, George will elaborate on this, but we've just ridden in insane waves from nothing really. So it's been a kind of, I think our first proper investment was Melon Port, and we put half our fund's money in, which was fund suicide because we didn't know what a fund was. And we did really well out of that and became friends with the co-founder, Mona.
She's amazing. And they're called Enzyme Finance now, is that right? Yeah, I've spoken with her, a phenomenal person, and that's no plug, so I don't own any of the token, but I really respect these builders, and she was trying to be at the forefront for her vertical and for her focus. Now, I guess, George, what would you say about that in terms of trying to reference the change we've seen in that short period from 2017 to now?
Yeah, I think some of it is regulatory in aspect. I think for those that are around in the very early ICO days, when an address went up on a website and you fired Ethereum to the address and got tokens back, as Keld was saying, that for us was really the sort of the goosebump moment. I mean, here was crowdfunding happening almost instantaneously, and all you had to have was some ether and an internet connection, and it was those moments where even in those earliest days you could see this was a completely revolutionary technology. And then combine that with the fact that these things were doing really well afterwards, like they were doing 10x, 20x, pretty quickly. And it's hard to know at the time exactly how naive the space was. But that really was, as Keld said, that was the golden time. I mean, you'd sit up. I was, some of these things I'd be, 1, 2 in the morning, and you're sitting there trying to press the return key to get your transaction in. But like everything, in this space, because we're dealing with money, and as I said, before the show started, money does funny things to humans, right? We the incentives produce different behavior in people, and so we started to see all kinds of shenanigans going on, addresses being put up on websites that weren't real, people
advisors
hogging the blocks, miners hogging the block. I mean, it was total shenanigans, and when that happens, gradually the whole sort of regulatory framework around crowd sales on the blockchain began to change. And then once we sort of hit the crescendo in 2017, it was never really the same again. And companies started bootstrapping with equity, with a sort of view to future tokens, and the whole SAFT agreement thing appeared. And gradually it became far more about getting the kind of the rocket fueled at the beginning. And then once it's in orbit, everyone can sort of take part. In a funny kind of way, that does favor the VCs. It favors the brands, and it favors the people who have the network and the connections to get in. But really, for a proper project that we'd respect, they demand something from us, right? Not just money, right? They need advice, and they need connections, and I think, to sort of round it off, I'd say that from the get-go, we've been really conscious of the fact that the people who are building this technology are the wizards. They're the people who understand deep down the technology and what's exciting. And so really what we wanted was the developers to call us up and say, man, you should see what I'm working on. It's incredible.
Yeah. Right.
And because they're the people who know, and we want to be there, like, just as it's happening, and they're seeing that that there's this new way of doing zero knowledge proofs, or a new way of scaling, or something like that. And so our ethos was like, well, these guys want to do coding, they don't want to do fundraising. Let's give them the funds so they can carry on coding. But the other side of that is that you've got to be really gentle with the assets you're being given, because if you're flipping and you're selling SAFs the moment you've signed them and all of this, the phone will stop ringing. The developers just won't call you, And so that's kind of how we've approached the space. And so even though it has become far more kind of VC focused, and you get these VC chains and things like that, as long as I think you're delivering value and you're treating the project with respect, then it's okay.
Well, let's explore this, because there's two sides to this emerging 221. And obviously, me as a researcher and participant, as someone who's an educator in the space, speaking to CEOs everywhere, there's a lot more going on than even just the VCs. And we can explore this as well, Keld, in this next question, because one of the things that's happening now is there's a bit of competition happening from the grassroots, almost sort of quasi or pseudo VC by design. Some could argue some of them are syndicates. Some could argue they're just grassroots influencers that are now emerging as, key and cornerstone VCs themselves, or capital firms, for want of a better term. Now, right now, there's a lot of push and a lot of questioning about whether or not they are as valuable if they're doing long-term work with their own networks, as some of those other capital firms that, you'd associate, by reputation. I think it's a valid question, because I've been asking myself this, having not invested for so many years and now coming back into the investment world myself. I think that it's an interesting question to pose, because you are the best resource right now of anyone in the world, transparently, to be able to say, what is that value proposition? What is that secret sauce that KR1 offer that perhaps, those other parties I've referenced don't, in terms of that sustained resource, that sustained support? Because as you appreciate, some of these guys that are traditionally in that sort of sphere, they're rising up right now into those, positions.
Yeah. And that's very much of the now question. I think what those influencers bring is the horde of the masses, which is not the best. It's not actually what you want as a project when you first get started, because you just have thousands of people asking, when token, and they're really focused on, the making money aspect out of it, whereas we're much more focused on the long-term aspect and how it fits in with the rest of the KR1 portfolio and the actual ecosystem itself. I think that we've got a reputational stamp that we give the project, that once we say, yeah, we're going to invest and support the project, that gets the weight of all our previous 60 investments with it in a way, and all the credibility that we've had. So it's like a quality seal that the project can have, alongside all of the other support and services that we can offer them, which are generally we do that for free, and just because we love the entrepreneur of the team or the project or to the ecosystem, we'll just do all that for nothing, and even get them in the media and all that sort of stuff. We're not focused on building a JP Morgan of crypto. We're just like three guys with our other partner Janos who are just crazy about this new technology, and that's genuinely comes across. We're not in it
really does. Yeah. It really does.
So we're in it to. We just love really cool engineers and entrepreneurs with projects that are doing something different, exciting, and that just gets us up in the morning to think, wow, we've got this. It's amazing how sexy you can make privacy, right?
Yeah, and what's great? Look, like that's a perfect segue, because sometimes I'll just fix my headphones because they're falling off. But sometimes, we find that some of sort of those lower tier entities, whether they be syndicates or some capital firms, they literally try to fabricate and manufacture sexiness, to use your word, where it's not necessarily, the true, tech design, the true, dev oriented, initiative that, comes forth. And it's interesting because, even you said, George, before that the devs will stop ringing. And that's really the conversation for more of that long-term collaboration, that long-term reputation, that long-term interest, because the phone will be hot, in the D and E grades for the other parties, where they perhaps don't care about that long-term, that's not of interest to them, but rather they want those short-term shills. So what's interesting also, Keld, is that you see this emerging sort of dichotomy, or this continuum of quality that's emerging right now, where many parties, that rely on the influence alone, forgetting about all the other aspects, they can literally shill the shit out of whatever they want if they get the right parties. And for them, perhaps the integrity of the technology and the people doesn't matter. But then you get the other side of that, which is where you're alluding to, where it does. And so you get this very unusual sort of, interplay, and this dynamic that's happening right now.
Yeah, that's very easily sorted by the bull and the bear market. Because in the bull market, all these influences pop up. In the bear market, they just go away. But we're still there throughout the whole bear and bull market. And that's the difference between us and there's many other differences. That's the cyclical difference of us. Those influencers, once people stop making money, that just evaporates. Whereas we're in it for, 5-10 years, and those people are in it for 2 months. 3 months.
And it's interesting too. Did you gentlemen notice that some of them, though, they don't evaporate? They stay. Because of the money that trajectory in the hype that's created. Some of those on that hype bandwagon in their secondary market, they'll continue to ride that and follow those parties and do reasonably well short term. And so it's almost like there's this short term, like the short term memory, kicks in, and look, there's not a lot of sort of consideration for years gone by, and so they re-enter. And so my question really is about, do you see that long-term things, whether it be through regulatory means, whether it be through top-down actions, whether it be through compliance pressures, what's it going to take for these patterns? Because right now, quite honestly, gentlemen, Uniswap did change things as well. The ease of listing something like the ICO style does happen. And they do ride, some parties just do ride the ease of that for, their system to work its magic. But unfortunately, that is very short term, and you'd appreciate that often that's likely to decline in value once the engine that's firing that system, whether that be, a bot, whether that be wash trading that's going on, whatever is facilitating that, or whether it's just influence alone, you would appreciate that there's so much more on the other side of the spectrum you can't rely just on influence alone to sustain, years of development. So how do you grapple with this? Because we're seeing launchpad after launchpad, we're seeing all kinds of shit coins emerge as well right now, doing exceptionally well. So when George was saying 10x, 20x, I was thinking, well, that sounds like now as well.
Yeah, I think as part of having a sort of decentralized, open source, permissionless technology, all of this is endemic to the space, and it is never going to go away. It's a spectrum, and has been since day one. Like from the very start, when someone had the idea to create another Bitcoin, but just turn the dials a little bit in terms of the underlying processes. And then I lived through that first kind of boom, like 5 years before the ICO started, and we had Aurora coin, which was the coin that was going to be airdropped onto all Icelandic citizens, and we had a coin for every country on earth, and this is all part of the trial and error that this technology's been doing ever since, really, and you can see this evolution happen, and at every sort of cycle of this evolution, when you go from Bitcoin through to the clone coin era, through to the ICO era and beyond, there's always this spectrum from total chances, basically, putting lipstick on a pig, or I think that's the way some people describe it, all the way through to people who are actually breaking new ground. And our job, because KR1 is designed to give shareholders access to the crypto economy, if KR1's a filter for that spectrum. What we're trying to do is get as close as we possibly can to what's real, to allow our shareholders access to what's real, because it's actually a really hard thing to do. And you have to have this view of time in order to really get to grips with it, because if you haven't had that amount of time in the space, you can watch an advert before a YouTube video and it sounds entirely plausible. Why can't we mine on our mobile phones? That's a great idea. I've got a mobile phone, I can mine, and it's this veneer that sounds amazing. But if you've been in the space a long time, you see that, that the complexity of getting a mobile phone to mine anything is really tricky. And so really that's the heart of KR1. That's the point is that Keld and I, not bigging ourselves up, but we've just been in the space a long time. And the ability to smell where on the spectrum a project is really what it's all about. So unfortunately, to your point in terms of influencers and the degen farming and sushi and all of this stuff that is sort of constantly happening, it's really the human condition. That's what we're watching. We're watching people kind of charge through a hole in the wall and stepping on each other to get through the other, to get through to the other side.
Well, George, can I just jump in and ask your thoughts, both of you, on this, because it's such a poignant reference point with regard to, even today, for example, Larry from the block was commenting in his tweet about, he was concerned about the emerging sort of degen space when we see all these launch pads, all these competing platforms. And he had a really valid point in one respect, because the degree and the power of some of that degen movement right now is quite considerable if we really take a proper look at this with regard to just how much of this is built on eggshells as opposed to the really good, nitty-gritty, high quality tech that, you do focus on. And he is concerned. He was raising the concern, how long can this last? How is this sustainable? To keep, for the market to keep going, if there's so many appropriations, if there's so many forks of different sort of strategies, if there's more and more platforms emerge for launching different startups simply for the launch itself, simply for that skyrocketing move. So when your agenda from the outset is tech first and second, third, and fourth in your case, what are your thoughts on this? Because it's a valid concern for many of the people in that long-term world right now.
I think you've got to look at the people creating the technology and their pedigree. I mean, it's the first thing we do. I think you've got technology's got the shelf life of a banana, basically. That's the famous quote. Technology is superseded very quickly. It's the same in the open source community, but kind of, people can create on top of that open source as well. So it's kind of got some protection against that. We've seen forks not really working. We haven't really seen a successful community fork that's really meaningful. But we've seen meaningful projects from meaningful people, as it were. So it's really the provenance of the people creating the technology that's the important thing. And as far as these platforms, and we're going to have a combination of sort of experiments that go really well for a period of time and then evaporate through regulatory pressures and issues. We're going to have national stable coins, regulated stable coins. That's going to have this sort of centralized finance movement without censorship resistance in it, and you're going to have the degens on the other side lobbing food meme bananas at them. Those two worlds are going to friction against each other. It's going to be endless experimentation on either side, but the degens are generally going to be on their own. It's going to be fascinating to see how those two worlds either mesh or one burns out. Do the degens burn out, or does the sort of...
Well, it's really interesting you say that, because a lot of the VCs that I study, including you guys, actually, you don't seem to have a DeFi sort of maximalist or purist position based on investment. Purely looking at this pragmatically, you seem to have an agnostic position about the platforms and agnostic about this with regard to the CeFi, DeFi, and everything between a CeFi or DeCeFi, however we want to say that, and open finance as well. So whilst obviously, we can get into some of the support you have for the Minute Cartel, for example, which I've followed for a long time. You're a key one of two VCs or two capital firms or ventures that really do support that the DeFi and the development side of this very strongly. And even George alluded to this, where the devs won't call, and that's some of the sources of those calls. The devs in those regions. But quite sincerely, there's quite valid arguments for the combination of these things, that quasi sort of decentralized world, or that goal of DeFi, but not yet there. And hence we see multi-sigs, but hence we see everything, trying to experiment with the vision, but not quite there yet. And yet we still see a vast, investment in these kinds of entities. That certainly do reflect, I would argue, support for all kinds of developments and businesses that are trialing and experimenting with the blockchain.
Yeah, I think a lot of this is down to product market fit, and I sort of stratify the space in terms of companies who are doing something in, dare I say it, the legacy world, that could massively benefit from a layer of transparency using a blockchain, using Ethereum. And you see that in energy, you see that in logistics, all manner of legacy businesses. And they're looking at Ethereum and the next layers in terms of Polkadot and things like that, to see how that can augment their business. That's never been an area that we've concentrated on. We're very crypto native, and that's mainly down to we're not energy experts. The regulatory red tape around energy and how nation states manage their electricity grids, that's you need a PhD to know how that all fits together.
Yes.
And you can't just go, oh, they're going to use Ethereum. Cool, we'll give them some money. It doesn't work like that. So when we're looking at DeFi and how powerful it is, it's because it's the first major area of Ethereum that has found huge product market fit. And it's totally understandable, because really underneath it all, the reason why it works is because of the speculation aspect of it, which is not a derogatory thing. These technologies float on that excitement of what's to come, which is another way of saying the word speculation. You're excited about what the future might hold. And I think that's why DeFi, is such a powerful part of the ecosystem, because everyone can see it working. You just look at Uniswap and you're like, my God, this kid in his bedroom in Canada has just built something which you just can't even imagine the volumes that are running through this thing. And so it's right for us as a company for that to be front and center. And Keld mentioned it at the beginning. Yeah, our first major investment was into Melonport. Melonport is DeFi.
It is
through and through. DeFi started day one of Ethereum.
Yeah.
It just didn't have that. It just didn't have that name. So I think that it's right that it's a focus. It is a super exciting kind of first product market fit of the space. It's DeFi and it's crypto native, which is why it's the sort of central one of our central focuses and fits into our sort of ethos. But does also feel that it's kind of like step one, and there is so much more coming. I mean, you look at something like Maker. Maker is just so mind-bendingly amazing that you can create stability out of the kind of the movement of lending yourself capital.
And then
you have to stop and think about it.
Right. And obviously you'd appreciate this as well. There's a lot of sort of commentary coming from the community as well about how that was heavily backed by VCs as well, as you'd appreciate. And so there's some fair criticism sort of laid there. But I wanted to ask you about DeFi, going back to that. When I talk to CEOs around the world, many of them are saying to me, even just recently, EasyFi, which is powered by Matic, which is now Polygon, which, as you would appreciate, is certainly being supported by a great deal of developers and members of the metacartel actually at the moment. So what's interesting is that you see this question about whether or not DeFi is actually sort of attached to one platform in and of itself, or is it actually a generic term? Is it something that really should be applied across the space more broadly with a bit more of an open mind, because it's the vision, it's the goal, it's the endpoint, that we're all striving for, the hoop that we want to shoot for. So why is it that we do see, even in some of the spaces, the places within the metacartel, some of those actors in there who are legitimate ones in serious places, they want that to be a trademark for Ethereum. So my question is that right? Is that valid when we see, CEOs, for example, from the Polkadot ecosystem, some of them are really trying to bridge the EVM with really challenging bridging technology so that DeFi can be relevant, across platform. So where does it fit, guys? Where does this DeFi narrative go?
I paid $120 to swap some coins on Uniswap, right? And if you think that DeFi is only going to exist on Ethereum and everyone's going to pay that kind of fee for that kind of throughput, I don't think that's sustainable. If something comes along, you see, if I have I don't know, an interoperable Uniswap, right? 99% of the people who come to that platform are doing it because they have a very specific reason for moving one coin into another, right? And you can see this with things like PowerSwap, things like 1inch, right?
Right.
I'm happy for you to carve off another little fee if it means that I'm getting less slippage and you're spreading it across. And we've seen the rise of those kinds of platforms. Other platforms come along and completely take away the ability for fees to be that high, yet I'm getting the same effect. The market will move. It's
logical, isn't it?
Time.
Yeah,
it's entirely logical. But that shouldn't take anything away from how unbelievably amazing Ethereum is. Ethereum is like the biggest example of a victim of its own success that I've ever seen. Right? I mean, here's this thing. I'm willing to pay $100. Right?
Yes, you are. Yeah, we are. We understand because we're crazy nerds.
It is, well, yes, but it's because of what the system behind it is allowing me to do.
Right.
It's and because we don't have another option right now.
Yeah.
And that's going to change.
Well, Keld, do you want to take it away on this point, because this is the really exciting time happening now where there's so much debate. It really is exciting because you get that centralized entity of Binance. It does not have a good rap when it comes to those, and rightly so, because the true agenda of Ethereum right from the outset from Vitalik and many others was to really sort of unleash the potentials of DeFi for the future, not even necessarily using the term at the time. And now we see the BSC. We see, emerging blockchains really showcasing how transactions can be vastly reduced with their own scaling solutions. And then we see the likes of Ethereum really trying to bring to the fore scaling solutions to reduce their own fees as well, arguably over time, because even with Uniswap, it's so expensive right now with all the bottlenecks happening. So, gentlemen, what are your thoughts sincerely on, the emerging sort of hype of BSC recently? The price went crazy on BNB arguably for this reason. We don't, and some of it, has been questioned by many parties out there in the space. But we still see a lot of this sort of rivalry and tribalism in the space. But when it comes down to what George is saying, price seems to be paramount with the user. For the user on the top, not us who are the blockchain sort of framed thinkers who want to invest in the mechanics. But the user may not even want to know about the mechanics, but they care about that transaction cost. So how do you deal with both of those things? Because you're investing from the bottom, the user's using the top, and they're seeing that there's cheaper options out there than that very much beloved Ethereum ecosystem.
I think in any technology, you look at the natural flow and rhythm of the history of it, and it's always been improvements, cheaper, faster, quicker, improving on the previous, and that's just natural. We saw it with PCs. We've seen it in sort of the web, e-commerce, and it's happening now in this sort of early industry. And it's basically, Ethereum started off being a Swiss Army knife. People have picked apart that Swiss Army knife to create a specialist version of the tool on that, and done very well. Made something amazing out of it. Ethereum suffered because it does a lot of different things. It does the execution and it does everything on chain. And people have come along and said, that doesn't work. We can improve on that, and that's just where we're at. The fact it's open source, it's only speeding up that whole sort of development cycle. So I think, yes, it's expensive to send a transaction, and that needs to be resolved. Otherwise, people are going to migrate. And actually, why Gav Wood built the Polkadot ecosystem is partly because of some of the issues he had with Ethereum. But when you have geniuses like that with this technology, then you're going to have very fast development cycles and improvements. So when we invest, we look at issues we've got. How can that be solved? Are these the right people to put money into? How does the protocol fit in the Lego stack? What's the competitive teams against them? So or is the quality of the team? There's competition everywhere, but what's the team quality like? But this is all about innovation at the end of the day, right? This is all innovative stuff.
Right.
It's all a giant experiment. Some of it's going to go wrong. Some of it's going to go right. We just make gut feelings and get sort of.
Kel, come on, let's be real. You don't just do gut feelings. I've seen how you operate. I've seen your portfolio as well, mate. So, you make a good point. And one of the things also, let's be real about this, is that you have a very strong alliance with excellent other top tier A grade investors, and I mean those long-term holders. I've been following along, that. And when we talk about top tier, we're talking about electric, we're talking about A16Z, talking about those kind of standards that we really, as educators or as investors, and we're both, we are trying to make sure we emulate that with that long position. Now, A16Z are famous for that. They are one of those rare investor portfolios that will be transparent right to that point, and they'll literally state that. But you also get those that aren't so transparent, even in the sort of B and A grades where you don't always know, because the reality is, like you said, sometimes we'll make a mistake. Sometimes we will stuff up. My apologies for the sound. Because at the end of the day, not every startup's going to make it. But going back to your point about Polkadot, referencing them, or it could be Cosmos, or it could be really any of these key layer 0 to layer 1s that are emerging. What it comes down to at the end of the day is, are those core and fundamental technologies that really have the ability technologically by the code and the team to really make a difference in that vertical that they want to create? And that's where it comes down to good research from your team. I've always found the best researchers in the VCs because they're poached every single time. So have you guys noticed that as well?
Yeah. So for us, because we were early, and we started quite naturally just talking to some of the other early, guys like Kinetic and Polychain, Coin Fund, Pantera, the crypto native funds in the early days were the ones who had some sense of what was happening. The much bigger funds were, came a little later, and so I think part of what's unusual about this space is because we're talking about open source networks that have a token. It's not IP, right? You're not, or at least in many cases, you're not, all trying to sort of elbow each other out of the way to get as much of the IP pie as possible.
Right.
Which is the sort of normal VC, way of doing things, right? You're trying to spark a network in various geographical places around the world. So it started out very much like, we have this project, it's come through our network, we think it's really interesting, what do you guys think?
Exactly.
And that still continues to a degree. But what you do over the years is you begin to build up a picture of your sort of co-funds, as it were. You get a picture of how they view projects, what their filter system's like, and where they lean, so I'm good mates with Jake at Coin Fund, and those guys have always been very interested in the kind of social side of it, back in the early days when things like Steam were moving, and now Jake's super interested in the NFT space, which I love. I'm fascinated by the NFT space, but it doesn't kind of sit in the KR1 sort of center of the Venn diagram, particularly. So every fund has kind of got its own sort of skew in terms of what they're interested in and what they think the future looks like. And so you, over time, you build up a picture of who's going to be most interested in the project that you found. And part of our job as an investor when you're dealing with very, not fragile, but very early stage companies who are still building their team, they're looking for a jurisdiction to live in, they're looking for their CTOs, or if they've already got them, their marketing guy, like the very earliest stage of building out some of these projects. What you should do is you should begin to sort of curate who their support group is. And that's really, I think, where value can be accrued from an investor is say, look, this angel or this team, they really get what you're doing. Let's give them a call. And so it's using your network to build a group of people who are going to help you take your project forward. That's what it should be.
Yes, Meltem Demirez actually put out a tweet recently, a tweet thread, and she was mentioning the point that, in 2021, your network's your gold, to sum up, that point. And really, I think she's exactly right in that sense. But when we talk about influence also, one of the things I've always said, and I tweet about this quite a lot, in elaborate ways sometimes, but influence, it comes with a hierarchy, it comes with complexity, and often influencer is stigmatized. But the reality is in crypto that every single, VC, there's some degree of influence, because you're public, the majority of them, and many of the participants, many of the members, even LPs even, they are striving for, some of them, for influence, for effect. And then we see another interesting anomaly. We see, well, it's not so much, you'd expect this to happen, but many of the media sources, major ones in crypto, they now disclose their holdings for their teams, and you see absolutely correlations between their interests, their bags, and what they essentially put out. So there's a lot of conflations happening. There's a lot of conflicts of interest. There's a lot of skewed media out there, and you would appreciate that all suits the initial bag holders. But I guess my concern is, when you know that the top echelon, the top standard, the top A grades are still using influence as well, what's stopping, a closed wall environment? What's stopping, this problem, this anomaly of having these castle gates and all of the community unable to enter into those early investment rounds because these gates are protected, and all these VCs, arguably, or many of them by association, can maintain the status quo and can keep reinvesting in essentially a closed environment? Does it concern you that can happen?
It's actually, it's a paradox really, because you don't want the concentration of wealth. You want it evenly distributed, but you also want, the project also doesn't want thousands of investors from day one. It's too much of an overhead.
Right.
So what VCs do is they actually allow the project to build quietly without much noise and the overhead of, lots of thousands of shareholders rather than 5 or 6. So what is it? The good projects will actually allocate and say, okay, we need distribution, we need lots of users and people that are interested in the network, and we will do things like a lock drop or a stake drop or
like Plasm did, which was
exactly,
really interesting.
Yeah. Something meaningful like that, and that's where we're heading to, and that's a fairer society, as it were. Where the role of the VCs is to take the early risk, because there is risk there. It actually de-risks the project later for the other guys to come in. Yes, they are paying for a token price that's higher, but within that, it's inherently de-risked. And when it goes ultimately to market, then everyone's going to do well out of it. It's just the risk rating is changing through that step. But as far as being, we don't want to recreate the Web2 VC model where it was just a huge concentration of wealth and no one could invest in it. But this is very different. The revolution was started by people like us individually,
right? And
the conglomeration of institutions and VCs is down to an efficiency from the project side to just get on with it, have 5 conversations, not 5,000,
right?
And not have the pressure. And that's really where the kind of the main purpose of us.
And and Keld, thank you so much for that transparency. We're not going to see that from every VC, that's for sure. But one of the things that's interesting is we're seeing an emerging hybrid model too. George, you would notice this as well, where you're seeing some of those initial leads coming from the VCs who are really helping with those resources. But you're also seeing that experimentation, as we've referenced with Plasm and many others actually, where there's a greater chunk of community involvement, even in the early entry, where they can participate through lock drops. It could be anything else. And I'm noticing right now, there's fairer launches. And I stress the word fairer in that comparative sense rather than fair, because, rightly, fair launch is a big question mark in and of itself. But efforts to make sure that there's more community engagement, but not compromising that long-term, initial strength of investment, that you need, that bedrock investment, that first, move that you guys would know is crucial. I'm really excited about seeing some of these experimentations and how things can be raised. Do you guys notice that? Because as someone who's talking to CEOs who are planning, or someone's talking to devs, which I do, they're certainly saying, Brad, what are the options out there? What can be done? And I'm certainly saying, well, it's pretty dynamic, actually. It's not just a one-way street anymore.
Yeah, absolutely. And really, that's when you can begin to look at the DNA of a project. When a project says, this is how we're going to distribute our token, you look at the pie chart. I can't tell you how many pie charts I've seen about, how the token's going to be, cut, and, this little bit of the pie goes to this lot, and,
right.
And really the DNA of the project comes through when you see that they are community first, because really that's a long-term view. They see that by being fair, they're going to give their project much more of a runway. And they're going to become a far more sort of keystone in the ecosystem, because that's the network effect. Everything that we're talking about here is all network effect, because we're in an open source blockchain world, right? So if it's, I could create an Ethereum tomorrow, no one's going to care because there's no network effect.
It's a very good point.
And so you have to be community centric. And if you want to succeed. Now, if you just want to make money and basically dump bags, then you don't have to do that. And that's not what we're interested in. But that's going to happen. Those kind of projects are going to appear from time to time.
Yeah.
But so you can very quickly kind of see where the team's focus is, and things like lock drops and stake drops. Parachain auctions on Polkadot, which we're about to all discover.
Can't wait for that. Super excited.
It's super exciting. That it's right that we experiment in ways that bring more people in, because just quickly, the ICO thing turned into a kind of money-making scheme for projects to, they get 200 million in their treasury and then all go on holiday for 3 years or whatever.
Yeah.
But deep down, when you look at the very beginning ICOs, it's all about getting the token out there, because that you have to get the token. That's the only way that the systems float.
And do you know what's really interesting, George? We need to talk about this. I could talk for hours and I just won't be able to because you've got to go. But one of the things I think is amazing right now in 221, and we've been in that research scenario where we read 1 million white papers. Remember that time? Well, right now it's a very different scenario because we don't have to do that anymore. That's a really important roadmap. It's a very crucial document, but we really look for proof of code, proof of utility, proof of product, all kinds of things now. And many of them now are coming out with a lot more. So that's really, I think, a big game changer because we just didn't have that in 2017.
Right, and what's produced that game changer really is the early VCs, because it's the early VCs that have put the money on the line to allow them to create that early technology that gives the market the ability to then judge. Just creating a lock drop is time and energy and expertise.
Right.
They need this runway to sort of make that happen.
Well, we could also play.
Happens to get the distribution, the decentralization. It's important from the regulation side.
Yes,
that's a key component of it. And
and you guys would have noticed also sometimes there was just such exorbitant raises that were ridiculous on the other side of this coin as well, in that the runway was just too ambitious, I think, for many of them, and they just went to, I don't know, Ibiza with it. I don't know, but sometimes it wasn't a genuine intention to utilize that money for the technology and for the team. And that was just part of the dynamic, part of the experimentation of the craziness of 2017-18. But now we definitely see a much more savvy and much more focused, I guess, VC arena. And on that note, we also see the likelihood of many of those who don't respect that, the ones who aren't valuing their own reputation, they will fall on their own sword. And that's why, you said before, Keld, in the beginning, reputation matters. And I think that's where you set yourself apart, in that your portfolio speaks for itself, your reputation speaks for itself, and there's a continuity there. Now, let's talk about that last thing, in this interview and this discussion, which is really the secret sort of source to, I guess, maintain that reputation, maintain that quality of investment, because that is something that's public. Your performance in your investments has been very, very strong. And so when we reference these key technologies, like you mentioned with Polkadot as one, or you mentioned, like I'm going to be talking with Reflexa soon, with Reflexa Finance, I'm really excited with also some of the things happening, even with some of the bottlenecks happening at Ethereum. There's really cool innovations even in that sense, and everywhere between the Cosmos, and dare I say, even with the BSC and other, even Arweave, there's so many, and you would know more. But what's that key, to I guess, isolating those key ones where that there's going to be success because of the due diligence you've done, and give us some examples, if you dare, with regard to ones that are at the forefront of your research right now.
I think it's the people at the end of the day. I mean, George will have views on this as well, but I think, Nexus Mutual as an example, Hugh came along. He was FD of Munich Re, which is a very big insurance company. And, he was just experimenting at an early stage in insurance, and that for us was like a really exciting opportunity to scale out the mutual model on chain.
Mm-hmm.
So kind of examples like that are for us are very, very exciting. So kind of looking forward, it's the people, it's the engineers who've been on a previous project and now doing a new startup that is tackling something in a fresh way. With the quality of the people that we know that can execute out. And I think those, I don't think we can discuss, because we're a public company, we can't really discuss what that is.
Yeah, no, George, just before you came back, I was saying, what's the secret sauce, because I was thinking, okay, if I was a fly on the wall, what are these processes and what's going on in 221 in terms of how you sort of scan through? And as you know, it's a process. You have that phase one, where you're pulling into the projects putting them on the table as a team. And what kind of things are you looking for? What kind of verticals? What kind of projects are in paramount? What kind of platforms? It's these questions that people would literally pay for that I'm trying to push, but Keld answered it very well. He didn't give away much at all.
It's a strange scenario being a public company, Because on the one hand, we have to be completely transparent. Going back to your point about VCs and transparency, we're probably the most transparent VC because everything we buy and sell and all the projects that we support all have to be in the public domain. But at the same time, everything that's happening in the future with our company is completely under lock and key and can't ever go out until the moment that it's allowed to.
Right.
So it's a strange dance that we have to perform, and sort of everything behind us is totally open and everything in front of us is entirely closed.
Yes.
And that's that's the world that us as a group and as a company have to live in order to provide shareholders access to the space.
And George, I wanted to ask you something, and this is, I think you guys will answer this very openly, some won't, but when you are sort of having that dialogue with the different startups, when you have that interest, and obviously there are those pitches, those reciprocal ones, some of the VCs definitely do request preferential treatment right down to, the tokenomics, or that right down to, separate conditions, separate terms. What are your thoughts on that? Because, if that became public in any respect, if that was released, I think it would really compromise their own reputations.
I think it entirely depends on what they're bringing to the table for that preferential treatment. So sometimes we'll understand, we'll see some companies, some VCs, we'll start talking to a company at a private, strategic round, and they've already done a seed and a pre-seed, and we'll look at the team that was in the seed or even the pre-seed, and very often you can kind of nod and go, that's great, because we kind of know the work that team will have done.
Right.
And then also it's about KPIs, right? So like sometimes you see a project, it's like, yeah, the seed round was 2 months ago and now we're doing this. It's like, well, okay, but like nothing has happened in that 2 months.
And so you're questioning why?
Yeah, it all needs to make sense. And like coming back to this, the DNA of a project, these are all those little sort of elements that feed into how enthusiastic we are as a team about a project.
Got it.
Right? If there's been 6 to 8 months between rounds and they've built an MVP in between, and they're having daily calls with their initial VC about how to do tokenomics, and the VCs found them their marketing community officer, and you can just you can build a picture of the intent here, and that's usually part of what feeds into your decision making as a company.
And gentlemen, I really respect your time and all the input you've offered, because you know the space so well. I think I know the space relatively well, but nothing compared to what you do. And we see now that quite rightly anyone could spend enough time in this space and realize that there are certain parties creating scenarios where that various people in the community can invest in those 100x's, those 50x's that are just empty shells, and even you could do it if you really wanted. You could go down that short-term path and you could make that quick buck, but you would literally lose all the support from that top tier. You would literally be shut out of that, don't you think?
Yeah, definitely. I think those are the plays that we avoid. We don't have to sell down. We're not like a private crypto fund where they have individual investors, LPs who sometimes redeem and they have to sell down. Mm-hmm. So we are permanent capital. We're a public company. So technically we'd never have to sell down. So we don't have sell pressure. So that makes our decision making process much purer in the sort of longer term aspects of it. We don't have any pressures to sell down assets, right? Especially now staking Polkadot and Cosmos, we're generating $1.5 million a month. That we don't have the pressures of other crypto funds to maybe make flips and plays like that.
Well, so gentlemen, thank you so much for your time, Keld and George. I really mean it. What I like is that you're investing in the infrastructure. You always did from the beginning. You've made it clear also that you do value all different sort of technologies, different platforms, different I guess, bedrock blockchains as well. And everything, comes down to the quality and integrity of the team and the tech and what can be plausible and done. And also you're realist about the experimentation. And I really appreciate that transparency. One last, I guess, fun plug. What excites you right now in terms of the platforms, in terms of anything that you think is really significant 221 Q1 right now that people should be really thinking about, because the research house, the VC, all of that's really the starting point for a lot of people in trying to hear about some of those things that, the retailer ordinarily doesn't have time for.
I've got one, then George will probably have one. It's Polkadot IPO, ETH ICO narrative, right? They're not called IPOs anymore, but the crowd learned. So what we saw in the ETH era, we're going to see with the Polkadot parachains, the hype and excitement around that.
Only just beginning probably as well, Keld. So what about you, George? What are your thoughts?
Well, that was going to be my point. Not Polkadot specifically, but just that the thirst from the community and the whole marketplace to see what's next. There's a sort of sense that we all realize that what Satoshi invented will play out over decades. Basically trust and disintermediating trust, and there's so many different applications and ways that we can take that invention, and Bitcoin, Ethereum, Polkadot, Cosmos, the whole thing is amazing and healthy, that we are all heading in this direction and thirsty to see what's next. And I think that's what drives us as a company is to sit as close to the edge as possible. And to see what's coming down the line is just really exciting. And sure, Polkadot and Cosmos and dare I say it, Definity as well is looking very interesting. These are all projects that are pushing boundaries, and that's kind of where we want to be. And all of us, right? That's where the excitement is.
Well, nice Definity plug, I have to say. You put that in there cleverly. And I would also say ones like Arweave, Near Protocol, even some of the experimentations that Solana are doing.
I don't want to end on a portfolio plug, of course.
Well,
there's a few out there that are super interesting.
Yeah, and I have to say one thing I've liked about Keld as well, as we've been talking, throughout the years. He's always, supported some startups he hasn't even invested in. It's really just a supportive environment. You would be the same, George. So you don't have to own something to support the community. So I respect that a great deal about you.
Absolutely, yeah. I mean, I spend an inordinate amount of time in the NFT space because it just completely fascinates me. We have no NFT investments.
Well, there you go.
But yeah, certainly we'd be interested in anything that's pushing the boundaries.
Absolutely.
Yeah. So early. And in no way are we done yet.
Exactly.
as a technology.
And we're still waiting for more of that provability with the NFTs. And I'm looking forward to seeing more of those credentials built in to the blockchain. I'm really fascinated also by making sure that there's protections built in for NFTs as well. And I think there's so much coming for those layer ones, the insertion of different key qualities to build into the blockchain. So yeah, essential credential, there's a bit of a plug from me. People will know what that means, but I really like that idea. But yeah, just Keld, do you want to finish this off with one last comment?
You're not early, but you're not late.
That's it. Well, mate, to both of you, on behalf of those who wanted to learn more, get insights into these VC worlds, in these long-term investment sort of stakeholders, the ones who are uplifting the integrity from the beginning. Thank you so much for this very transparent and insightful discussion. It means a lot to all of us. And hopefully, guys, when you're not as busy as you typically are, we can catch up again for round 2, where we can just catch up for that crypto convo, getting real on the blockchain, and really letting people know what it means to be a long-term investor for the longevity of this industry, so it really thrives for decades beyond.
Thank you.
Thanks for having us.
Yeah.